Welcome to Money with Mark Albert. Today is we're looking at the Bank of Canada rate update for October the 28th, 2020. And so what has happened is they have updates every 8 times a year. And there's one more for this year. You see on the screen here. So basically December 9th. So if this is something that's of value to you, please subscribe. Okay. What happened is the Bank of Canada, they have maintained the rate, which was 0.25%. So that's what they're doing. And basically they're going to be maintaining the rate for like ever and a day. It's kind of like that's how it's going to feel. And we're going to get so accustomed to these low rates as the years go on. And then the day is going to come where the economy is very strong down the road, years down the road, they're going to start increasing rates. People won't be ready for that. This last decade has been a fairly low interest rate environment compared to historical numbers prior to that. But we're going to be in a kind of unprecedented times in terms of low rates. And we'll get into that a little bit. So Bank of Canada, they talked in their rate announcement about the global economy. They talked about the Canadian economy as well. We're going to hit the global economy right now. When they talked about the U.S., basically in a nutshell, they're saying that GDP growth rebounded strongly in the U.S., but appears to be slowing considerably. And so, of course, COVID numbers are up right now in the U.S. We're heading into an election and so on. So in China, this is interesting. And some of you will be like, wow, I'm surprised. They're basically saying that the economic output is back to pre-pandemic levels in China, which is crazy. Emerging markets, the economies have been hit harder, especially with those with severe outbreaks where they've taken place. In Europe, recovery slowing amid mounting lockdowns. So there's parts in Europe that are really getting hammered hard on this second wave of COVID-19, and that's having an impact there. Globally speaking, from a GDP perspective, global GDP is projected to contract by about 4% in 2020, which is our current year. And then they're anticipating growth. So they're anticipating that we'll see growth of over 4.25% globally, on average over 2021 and 2022. So those are pretty positive outlooks as we look to the market. And by the way, when you look at the stock market, they're usually forward looking. So if this is the general consensus, not just with the Bank of Canada, but in other central banks globally, as well as economists globally as well, then that'll be quite interesting. So the Canadian economy, the rebound in employment and GDP was stronger than expected as the economy reopens throughout the summer. So the economy is now transitioning to a more moderate recuperation phase. So the summer, we saw some fairly strong growth. Now we're back into a moderate kind of recuperation phase. Of course, some parts of the country have gone into, some of the metropolitan type areas have gone into a phase 2 of the pandemic, particularly in Ontario. And in the fourth quarter, what they're suggesting, now fourth quarter, of course, is October, November, December of this year. They're expecting growth, expected to slow marketably due in part to rising COVID number of cases. And the economic effects of the pandemic are highly uneven across sectors and particularly affecting low-income workers. So now, after a decline in Canada for 2020 of 5.25%, the Bank of Canada expects the Canadian economy to experience growth in the next 2 years of about 4%. So they're thinking the global economy about 4.5%, but in Canada about 4% for 2021, 2022. Growth will likely be choppy as domestic demand is influenced by the evolution of the COVID virus and its impact on consumer and business confidence. So consumer spending is a big deal when it comes to the economy. So if consumer confidence in the situation gets impacted negatively, then consumers aren't going to buy as much. If they're not buying as much, then across all these different industries, their sales numbers are going to go down, which means manufacturing numbers are going to go down, which means that there'll be an increase in layoffs. And then the cycle gets worse. So then that would push us into a double dip recession sometime into next year, if that happens in a strong way. And also business confidence. So businesses, businesses, they want to expand their business. They're in the business to grow and become profitable. And when business has confidence in the economic and in the future, then they invest. They invest more. They'll buy another property, or they'll open another branch office in another city. They'll expand their corporate office. And if business confidence is weak, then in Canada, if consumer and business confidence is down, then that will have a real strong negative impact on the economy. So considering the likely long-lasting effects of the pandemic, the Bank of Canada has revised down its estimate of Canada's potential growth over the projected horizon. So the last rate announcement, they're a little more hopeful. Now they're a little bit softer on the growth projection. So for any of you who are into this kind of thing, please subscribe to our channel. It'd be great to have you a part of our community. These are the next updates, December the 9th. And it'll be interesting as we get into the new year as well. I think that it's going to be a whole new year. So we'll see as they project into 2021, 2022. So good thing to subscribe. Thanks for being with me. I trust that you will have a great, successful fall and into the new year. And we'll talk to you later. Thanks for being with me. Bye now.